One.
There are good days to report earnings. There's bad days to report earnings. And there's really bad days to report earnings. It's a bad day to report bad earnings. In RCL's case, good earnings really didn't matter. But we're starting out in the red here. We have a catalyst at 8:30. We have Marc Chaikin at 8:15. We got a bunch of earnings reports to cover. It's Thursday on Pre-Market Prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin
This is a volatile puppy here, isn't it?
and Dennis Dick,
I'm bidding a penny. I'd buy that stock for a penny.
with everything you need to start your trading day.
All right, welcome, investors. Here we are, 30 handles in the red at 41.79.75, trading just off the pre-market low. The buck is up 31 cents at 106.66. Ooh, a lot of sixes in there. Bonds, well, I'll consider it an update because they're only down 3/30 seconds at 108 and 10/30 seconds. Crude bouncing around like a yo-yo, down 206 at 83.32. Gold in the green by $1.10, 1996. Silver in the green by a dime at 23.10. And Bitcoin, after a couple good days, surely not giving much back, down $190 at 34,650. We are got a lot of earnings to go. We're going to bring Dennis in. Dennis, I got one question for you.
Yeah.
So GDP is coming out at 8:30.
Yeah.
You know it's going to be a good number.
Probably.
So is it going to be like too good of a number and oh, the economy's too hot and we've got to keep raising rates? Or it's going to be, oh man, you just can't kill this economy. We're not going into recession. Bye, 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 bye.
The funny thing is, as much as we were in the silver lining market 2 years ago and they always found a
Opposite.
reason to buy stocks, this is the opposite. So I don't know what the opposite of a silver lining is, but they find a reason to sell stocks. And we are oversold, folks. Like, we've been calling for this sell-off and we have been absolutely correct about it. We've been talking about this. I started talking about a bear market a month ago. Now there's people starting to talk about a bear market. We've got to, at a certain point in time, say that some stuff is starting to get priced in here. I'm not buying Microsoft at 32 times earnings. I'm not talking about that. What I'm talking about is what is happening in the small cap space. There's just assassination of stocks. There are stocks just down 30, 40, 50% in 2 months. Stocks pricing in like they're never going to sell another product ever again. I mean, I don't know if at a certain point in time it's getting overdone. And I'm not saying you go out and you buy the IWM. I'm just saying the time to short stocks is not today. The time to short stocks was 3 weeks ago, 4 weeks ago. Now, I'm not saying it's a time to buy yet because I don't want to catch the falling knife and I don't want to be too early on the buys. But I think if you're short, I think it's time to start bringing some stuff in because it's getting to a point where we have priced in a lot of really bad news. Not in the mega caps, not in the Magnificent Seven. I think there's going to be eventually a trade where some of this other stuff bounces. I mean, we talked about Dollar General as an example. I mean, we're starting to see bounces in oversold stocks. DG has held its bounce. It's, obviously a trade down effect. There's lots to talk about there, but I think we've just got to be cautious getting bearish now. Cautious getting bearish now. Not saying we're covering, not saying I'm buying anything. I'm not calling a turn here yet. But if you're sitting here short stocks, I think you got to look at a certain point in time and say, maybe not on the SPY, but on certain stocks like that have fallen 30, 40, 50%. I mean, the airlines, relentless sellers. They just go down every day.
Oh, I know.
No, there's so many stocks that look like this, though. Like you bring up anything that's basically outside of technology,
Can I
and it
give you
looks like
something?
this.
Can I give you
Yeah.
something to take a look at here? Because remember, we had Josh do that article about, looking for stocks, potentially to buy. And he did this article here on premarketprep.com. And he did it. He did a great job here about the consumer staples and Berkshire Holdings. Now, we know Warren bought some more stuff, and we brought this stock to his attention. And the stock that we brought to his attention, the stock that he put in his article was General Mills. You should go to premarketprep.com. This is an excellent article that Josh did it, the editor over at
Yeah.
premarketprep.com. Look at now, he wrote this a couple weeks ago, and I remember you. And the reason I got the idea from you, Dennis, you were like, General Mills, 90 to 60, Ozempic. No one's going to eat cereal. Everyone's going to stop eating food. And at least you've distanced yourself from the October low here a little bit. I don't know if it's
Yeah.
just another dead cat bounce, but if you're combing the ditches for stuff, that is an excellent article. And I was hoping Warren was going to buy it, but instead he bought Oxy. But
He only buys Oxy.
he only buys Oxy. Little side tangent there. Mitch is in the background. He's ready to go.
Conversation. We need Money Mitch's thoughts as well because it's an important conversation. We're gonna get Marc Chaikin coming on at 8:50.
The heat is on.
We don't talk sports on this show. We hate sports on this show.
Oh, the Pistons should have won that game.
Again.
Well, the heat is on the market, man. That's what really is
That's what
happening
he
here. You like that, right?
Yeah.
Yeah, the
Okay.
heat is on
We'll
this
give it
market.
away. We're ignoring the sports part of that shirt, and we'll just take the heat part of that shirt because this market is taking heat here. But
yeah.
This market is just selling everything, and maybe we shouldn't even start with Meta because Meta was a yo-yo, and we could get to that after Marc. Maybe we'll keep going with the macro talk here, but I want to tie RCL in because it's such a good example of what is happening in this current market. This market has full-on just turned like we sell stocks no matter what. We sell rips no matter what, and it's starting to become too easy for the bears. It's starting to become too easy, and the reason I say that is because every rip is getting sold. Money Mitch, go into this RCL quarter, give us the fundies, and then I want to talk to you about the trading action in this.
Let's take a look here. Royal Caribbean Q3 adjusted EPS at $3.85 beats the $3.46 estimate. Revenues at $4.2 billion beats the $4.076 billion estimate. They did say that they would have some impact on their EPS from the conflict in the Middle East, only about 3 cents on the EPS. Royal Caribbean expected fiscal year net yields to increase from 12.9% to 13.4% in constant currency versus 2019. And they did see fiscal year 23 adjusted EPS at $6.58 to $6.63. So at least the report all looking good here. And I think you caught a lot of the earnings talk also, Dennis. What did you see on this Royal Caribbean report?
Just reading the commentary from from obviously the conference. Well, I don't know if it's at the conference call, but I was reading market commentary that people were posting what was being said, and so interesting. They're talking about that the consumer is very strong, robust, all the big words you want to see. They're talking about accelerating demand in 2024. I'm not kidding you. That is in there. Accelerating demand in 2024. And everything you see here, they blow the numbers away, they raise guidance, talk about a robust consumer and accelerating demand in 2024. And the stock pops initially. Bring up the RCL chart, Joel, because you're showing the wrong run. We're not talking Carnival. We're talking Royal Caribbean.
I know. I wanted to
go back to RCL. We popped over. How high did we get here? 80. How high did we get?
$86.
Over $86. So we popped, rightfully so, on this report in a normal market. This stock would rip on this. This would be up 7-8% in a normal market. It's better than the July quarter. This looks better than the July quarter when they went from 100 to 110. But we are not in Kansas anymore, folks, and people do not have follow through in their buying. And it's teaching you something. When the bears are in complete control, and they've been in control for the better part of a month here now, maybe even 2 months, rips get sold. And this thing did everything right, said everything right, and the market sold the stock off and took it red. That is unbelievable because this was a really good quarter. I'm not saying the market is wrong. I'm saying this is why the bears are in complete control. And the market obviously doesn't believe that Royal Caribbean knows what the hell they're talking about. They are saying, no, we're not buying this. We don't believe what you're pitching us here. We think it's going to slow down in 2024, or they would be buying the stock. So the market not buying what RCL is trying to sell them.
I like the area that it bombed at a couple days ago. There's 3 or 4 lows right in that area back in May, 78.5 to 80. So you have an identifiable area here. Kind of instead of it just bolting out of here, I'd like to just kind of have a couple quiet days, maybe consolidate above this low. And then if you get a breakout of the consolidation to the upside, I just fundamentally, and then we can move on from this thing. You had look at the bottom month chart. You had COVID, right? And who the hell was going on a cruise and booking
Yeah.
cruises in 20, right? And then you had everyone like, I'm getting the hell out of the house. I'm going on a vacation, and you had a big rally. And then, you got a bear market in 22 that hurt things. So there was a lot of pull forward. A lot of people are just getting out. There's got to be some kind of normalization, right? It's not COVID. So there's no one going and everyone's not going. Maybe people, the geopolitical things are not helping it, but maybe it's just going to get back to just a little normalcy, normal bookings back to they were in 2019. And then
they're not even talking about that though, Joel. They're talking about better. They're talking about record bookings.
Yeah, I think what it is
this
also
isn't even talking about like they're like killing, and they are, and this isn't like, this is a fact. They're killing it right now. They're killing it. The question is, are they going to continue to kill it? Money Mitch, what are your thoughts here? I mean, you're quiet in the background here. This stock encompasses so much what we're talking about here because the consumer is still strong right now. This is showing the consumer strength here. The question
so one thing that I would say, especially about cruise lines, right, is that when you reserve your cruise line or your cruise that you're looking forward, do you do it 1 week, a month out? No, you're usually doing it like 6 months in advance. So that's one thing that I would say about this, right? We still need to go through that demand first. And I think that you'll start seeing the real destruction next year on this stock. And so for right now, at least the way Royal Caribbean is, things might be looking good underneath the hood, but they just don't want to tell you what they expect on demand coming forward, really, because
they're talking about next year, Mitch. They're talking about
because they have like 6 months out probably that they're seeing right now, and at least 6 months out, things are still fine. I think underneath the hood for Royal Caribbean, because I was even looking at taking like a cruise in like May and March, and I was looking at this back in July. So if you booked it back in July, that was at the top of RCL. And now you're starting to see that leak come in. I think you'll see it. It'll just take a little while longer on the Royal Caribbean.
Dennis,
the quarter was fine. It's ridiculous that they took this red, to be honest. It is ridiculous. It is starting to pop up here a little bit right now.
I'm having some internet issues, guys, so you lose me.
Okay.
Oh, sorry. I'm not trying to predict where Royal Caribbean's going to go here today, though. I'm just saying that this is a point where the bear market is in control here, that they can take this thing red. In a normal market, this would be up $5-6 on this for fun. It's just not normal markets anymore. And let's go grab Marc Chaikin, because I think he'll have commentary here too. It's concerning when they're tanking stocks on good earnings. But again, are we getting oversold? That's why I want to bring Marc in here. What's Marc think? Let's bring him in.
Give me a second, guys. I can't even get my computer to work here.
Uh-oh, internet issues. Well, me and Joel are still going here. Hopefully don't lose the show because Mitch is running it.
Yeah.
No, I'll switch to Joel, but I might need to just back out and close my...
Okay. We'll let Money Mitch figure out the stuff in the background here.
I'll be right back.
I mean, let's talk Mohamed El-Erian here this morning, too. He was on CNBC. We love Mohamed El-Erian. Have we ever had Mohamed on the show? I think we did. We had him like years ago. We should reach out because I love Mohamed El-Erian. I think CNBC sometimes has exclusives on this stuff, and then they fight you when you try to go get them. But let's see if we can get Mohamed on the show.
I got a confession to make.
What?
I have him on the schedule.
Oh, ooh, awesome. CNBC hasn't blocked it yet. Now we just told them, so they're going to block it.
Yeah, maybe I shouldn't have said that. We've been going. I mean, he answers his emails, man. I mean, he's very polite, and we've been going back and forth. So I don't have the date in front of me, but
so we're going to get Mohamed on the show, which is awesome. I'll just summarize what he was saying on CNBC, because there's certain people I would say I don't listen to 90% of the people on CNBC. When Mohamed El-Erian pops on, I unmute and listen to him. He is very smart and he follows the macro obviously better than anyone. Obviously very strong on understanding the economy. Saying a lot of stuff that I've been talking about. He's worried about a recession in 2024. He's talking about the consumer savings now being exhausted, which we've been talking about. He didn't mention credit card debt, but we can talk about that. We know it has soared. He talked about interest rates being problematic, not only for the consumer, but for the small business. And this is the issue that you're going to have in 2024 is businesses getting financing, not just the consumer getting financing, but businesses getting financing. Interest rates are a serious, serious problem here. We need to stop having rates go higher. The Fed needs to stop, for one. Money Mitch is in the background, so maybe we can bring Marc Chaikin in, and we're just setting this up. But Mohamed doesn't see a rosy 2024. I don't either, but I just wonder how much is getting priced in already.
Let's find out what Marc has to say.
Marc Chaikin of Chaikin Analytics giving us his best information every 2 weeks on Thursdays at 8:15 a.m. You're back from Italy.
I am, and Italy was wonderful. There are people on the streets. People are traveling. Florence was a mob scene.
Still busy.
Very busy. The airlines are, in spite of the price increases, are booked. But
let's talk about this. Let's stay with airlines. Stay with airlines.
Yeah.
Because here they are. The airlines are still booked and packed, higher fares, yet the stocks are getting killed. What is going on? Why are the stocks getting killed if everything is so rosy out there?
Jet fuel. It's the cost of their biggest raw material, biggest expense. It's hard to go up when jet fuel is peaking.
But I made this argument, Marc, about 3 weeks ago, and oil has stopped going up for the last month, yet American Airlines, Delta, all of them still going down in the last month. So I would argue the first 2 months of this airline sell-off was fuel prices. But now fuel is stabilized, and actually oil has started going down, yet the airlines continue to go down every day. Why is that?
I'm going to plead innocent on this one and segue to the market. I mean, the airlines is such a small market cap compared to everything else we talk about. But there are some big issues, which you were talking about when I was in the green room. And it's relative to the market. I think you have three different markets here. It's sort of like the Republican Party in the House. There's three factions. You've got the tech stocks, so that's the QQQ. Now they're down 12% from the high, but that's not bad. They're still holding above our long-term trend line. You've got the S&P, which is testing a 10% correction as we speak. And then you have the equal weighted S&P, which is the other 493 stocks outside the Magnificent Seven. And interestingly, down 15%, almost 14% from the high. Breadth, as you point out, is oversold in terms of percentage of stocks above their 50-day and 200-day. And I got the first weekly oversold signal as of yesterday's price action in the RSP. We haven't gotten it in the S&P 500. So what do I think is going to happen? You're going to breach that 10% down, which is 41.60, 41.45 on the S&P close cash. That puts you into correction territory. Correction mode typically lasts 3 to 4 months. Guess what? We're 3 months in already. And we're still in that autumn panic zone. So I think we may see a 3% down day in here very quickly, given the sort of blow up in some of the tech response to the earnings. Facebook's turnaround overnight, I'm sure you talked about that, is pretty ominous. Yes. The hint of negative quarter in these big cash cows is a problem. But here's where we are. Think of the tech stocks as the last bull standing. There's an old saying that I'm sure you've used, that a bear market doesn't end until the last bull throws in the towel. Well, the tech stocks, the mega cap stocks, are the last bull in essence. And so I think it's very healthy that Google and Meta and some of these other stocks are reacting negatively to earnings. They're great earnings, But this, in essence, is the last bull throwing in the towel. So I'm still looking for a bottom. But clearly, if we go into correction mode, anything is possible, because that's a 10 to 20% decline off the high. And by the way, that doesn't mean that the quote unquote bull market is over. That's why they call it a correction.
Marc,
But
I wanted to come in here. Of course, if you're seeing correction, then you're probably not in the camp of global recession next year.
Oh, I think we are going to get a recession, especially if the Fed keeps rates above 5%. And it's really not the Fed keeping rates there. It's the bond vigilantes. You asked me, Joel, 2 weeks ago, or Dennis, what would get you bullish on bonds? And I said, maybe 5% on the 10-year. Well, we're there. But the bond bears don't appear to be letting up. So the market cannot deal with interest rates above 5%, in my view. And so if interest rates persistently move up toward 5.50 to 6%, then you're going to get a correction in the S&P, not the equal weighted, of 15 to 20%. Now, I can't predict what the bond bears are going to do, what the macro numbers look like, what the geopolitical numbers look like. This is a messy time in the world, in the Congress, in the economy. So do you sell everything? No, absolutely not. Because if you do that, some miracle will happen in the market.
Yeah, it does every time.
Can't do it. So fire away with some questions. I see Joel.
Do you think the Fed? I'm going to go first, Joel. I'm coming in for the steal once again, which I often do. Do you think the Fed should stop raising rates right now?
I do. I think
and I do too.
The underlying inflation rate, if you strip out, there's three components to the inflation rate that the Fed have identified: housing costs, the sort of food and energy components, and housing is a lagging effect, because and so if you look at their projections from either Zillow or the Fed of the current rental replacement cost, it's actually down near where they want it to be. So underlying inflation rates around 2%. But you've got all these overliers like healthcare costs. They can pop up in any given month, and they're very volatile. So I do think the Fed should stop raising rates. It's crazy. You don't want to push us into what could be a hard landing recession as opposed to a soft. And anybody who tells you they know whether it's going to be hard or soft beats the heck out of me how you know that. Because you can pick numbers to justify either side of that. You know, technology leads to productivity increases, the consumer stops spending and they default on their loans. You can cherry pick anything you want to justify hard landing, soft landing, or no landing.
Marc, we had some news today about the strike. And you talk about all the things that are going wrong, and things are dragging. I mean, this Ford news. Ford settled the strike. That's up 26 cents. GM, is that like you think that's a positive catalyst? It's going to follow through. I mean, I know the Chaikin Power Gauge is not positive. I mean, what would it take? I mean, you're looking at so many things: rising prices, more expensive cars, a lot. But what would it take you in our good old hometown of Detroit, Michigan? What could make you positive about the automotive sector?
That's a really tough question. I don't know.
Nothing. Okay.
I don't know. I mean, 25% increase in wage costs. That's the bottom line of the Ford settlement. That's not so fun if you're managing a company. And I think they've got all these problems with hybrids and electric cars, and I don't think anybody knows where that's going to land. But, in terms of the market, we've got some guidelines, and, they relate to various support levels along the way, including the March bottom. Now, by the way, the equal weighted S&P yesterday closed below its March low.
Not scary.
Yeah. So, well, but then it may not be scary, Dennis. That was my point earlier. It may be that now, if the tech stocks roll over, if the FANG index, rolls over, that's the last, peg in a bottom process. I don't think it's scary that they've been leading on the downside. That's a fact we've known. The IWM is like a disaster.
Yeah, it is.
And so I think if you viewed the mega cap tech stocks as really the safe haven because of the big cash flow pots that they generate, then throwing in the towel and starting to get oversold on some of those names, I think, is how you make a bottom. So
All right.
One name I got to talk to. Adobe,
Yeah.
still holding its uptrend, still bullish, great numbers, AI beneficiary, cash cow. Nobody can live without it. So at the right time, it's right on support here. I wouldn't jump in, but you're going to get a waterfall at some point, 1 or 2 days down. And I would definitely be a buyer of Adobe. We've liked it for a long time. It's on 2 of our buy lists, and it has been for quite a while. And so if you have names like that you're watching, then don't worry about the market. Let the market come to you in these names.
All right, I'm going to hop in here. Of course, I just want to get it out there for everybody watching. We will be having GDP coming in at 8:30. Expected is 4.3. Prior was 2.1. Q3 expected to come in. So, of course, that's a significant spike there. What do you think about those numbers, Mark? And GDP at least not showing up that weakness just yet. Do you think we're going to start seeing these numbers start to decline?
Oh, obviously, the Kansas City Fed Now cast was at 4.9 about a week ago, so I wouldn't be surprised to see it a little higher than the 4.3. But that's the rear view mirror. What's going to happen? I don't know. It does. I think the consumer may be maxing out, but boy, they've shown a proclivity to find a way to spend. And and that's that plus the tech. Call it a tech, what do you call that? Capital spending boom because of AI. I don't think that's going to stop because that's productivity. And you look at the various companies that are using AI and how they expect it to increase productivity, from Amazon in the warehouses to Salesforce in their optimization of customer data. AI is big, and I think it's the equivalent of the internet in the late 90s, and that's not going away. So you've got a lot of contra forces. So, and because of that, my bottom line is don't throw in the towel. And I can tell you what my mindset was yesterday when I saw the Facebook reversal. I called a friend and I said, how do I buy put options on the SPY, at 8:00 at night? And I couldn't find a way in my brokerage accounts. Dennis, is there a way?
No,
You have to short the futures. So
Mark, we got to
or you get an IB account, you can actually short SPY.
Yeah, exactly. But if I'm thinking that way, then you may be closer to a bottom than you think.
Mark, we got to let you hop. We got GDP coming up. Mitch is going to give us a preview. Marc Chaikin, founder of Chaikin Analytics, joining us here on Pre-Market Prep. Mark, always a pleasure. We'll dial you up in a couple of weeks.
And from me as well. Thank you, boys.
Thanks, Mark.
Have a good one, Mark. All right, let's get back to the markets. How are we looking before this print hits, Joel?
We're off
Setting up and getting ready. I'm going to the background for a minute or two.
Go wide, Dennis.
May 5th low. It was, you can find it. I gave up trying to find numbers under 4,200. So
can't blame you, man. Can't blame you on that.
Your May 5th low comes in at 41.70 1/4. That's an absolutely must-hold number. I don't think you get it. I don't think you get the jets to the upside here until you clear 41.88. Initial move is down. It's down. They hit it a quick 10 points here. I don't even know if the number's out here, but they're down. They're trying to get a bid. Go ahead.
Q3 at 4.9 is what I'm seeing right now. Yeah, 4.9 in the third quarter, according to the advanced estimate. In the second quarter, real GDP increased 2.1%. So Q3, we're getting a 4.9 reading. Pretty good jump there. Right. I mean, I'll show you guys this right now, but not bad there on that reading. Big jump there. And I'm looking for here. Yeah, confirmed. I had an estimated 4.3, confirmed 4.9, and I'm getting it straight from the website here, guys. So I can show you guys that. Now I'm going to look into the current release to see what's showing up here and why we're at 4.9.
Oh man, I was looking for the dip. I was hoping they were going to take it to the pre-market low, and they didn't. So I'm a little disappointed in that. Now I just talked. They did give a dip. I don't know what someone hit this on, but they hit it on something, and now you're popping back up. 41.88. It's thin up here, folks. The offers are going to be a little bit thin. So if you're like, oh, I'm just going to stay short, I'm just going to ride this puppy down to zero. There's not much in here, but 41.88. The only reason I'm giving you that number, that's mid range on the session. If you could get back above that, boom, maybe take a look. The pre market high, we had a lower open at 42.0450. So that was $5-6 below the closing price. A little bit longer term today. I know I'm talking some short term technicals. If we could just get back above 4,200 today, yeah, 4,200, I think that would be like a minor victory for the Bulls. But right now, you got a little pop, and off that pop, you came short of the 41.88, only going to 41.87 and a quarter. But looks like you got some bids out there. I'm looking at the stocks here, see how they're reacting. Some of them are off their lows, but I think they're letting the spoos do their shake and bake first here before they make the move. Actually, the equities are really not moving up. But Apple's not even trading here, down 80 cents at 170.30. So they're waiting for the liquidity
They've
to
come up,
do
Joel. They
a little
have
bit.
come up a bit. Yeah, they've
Okay.
come up a little bit. I mean, they're going to track. Like obviously, the high frequency traders are all over the ARB to a certain extent at 8:30 in the morning. The initial flush, like you said, I don't know
What
what they were
was
doing on the
that?
flush. Well, people looking and saying, "Hey, the spin," and if you want the spin, is like we're
Yes.
hot. We're hot, and that means they're not going to pause.
Yeah,
So, I
initial
mean, we
jobless
want
claims
the
did
market
come
wants lower
in.
rates. That's the spin. I'm not saying that's what I'm saying. I mean, there's a lot of good things to take out of this.
Initial jobless claims coming in at 210,000 versus a 208,000 estimate, prior being 200,000. Finally seeing a little bit over that estimate for initial jobless claims, maybe something that weighed in on that first reaction.
Well, we had PCE price index 2, and that was up 2.4% versus the estimated 2.5%. So that comes in light too. A lot of good news here from the economy, really. A lot of good news.
And I think that this is not what we haven't been said that. I don't think any of us has said that the consumer's already strapped, right? I think we're saying that we're getting to that point.
Well, that's what we're trying. Me and you, Mitch, have been saying January. They're going to find money to spend. I mean, there's no doubt the consumer has continued to spend. Things are busy. I mean, look at, what the economic
What
data
Marc just
is. Look
said.
at
Look what yeah.
so what is happening? Like we've
I
got
don't
to
know.
analyze. I mean, stocks away from the Magnificent Seven have been slaughtered in the last 2 months. Slaughtered. I mean, RSP, go to the equal weight. We were 155 in August. We're 135. Well, that's 20 points down on 155. Don't worry about a correction. It's there. We're down 15% in 2 months on the equal weight S&P. Is that right? 15, 20? Not quite.
Yeah.
12 and a
Look
half.
at
12.5% we're down in 2 months. That's why I'm saying is if you're getting bearish at this point in time, you are selling in the hole. We are pricing in a lot of bad
a
news.
lot of
I've
bad
been
stuff.
bearish. I've had a lot of cash in my long-term portfolio. Rightfully so. Whatever stock I had in my portfolio, besides maybe a couple, that have held up, has been crap. And the reason is that all stocks have been crap in the last 2 months. So are we at a point, I'm posing this to the chat as well, are we at a point where we start putting some of that cash to work? I don't know. I think it's going to be a rough 2024, but do we get an end of the year rally? Should we start bottom, just looking around, or do we wait until we get more information? I don't know
Well,
the answer to that.
well, here's another thing too that you got to take into consideration. So the Ford people are going to be getting more money, right? And that's not going to be great for inflation or anything like that. But if they're making more money, they're going to be spending more money, right?
Yes. Yeah.
So that's good. Overall, that's a good thing. If we have inflation under control, which is the $64,000 question. But if people are going to be making more money, then they're going to be buying nicer stuff. They're going to I'm not sure they'll be buying big ticket items, but they're going to be happy. Maybe they're going to be investing in the market more. Maybe they're going to be doing different things with their money. They're going to learn from their experiences. So that's just one way to look at it. We did get to 41.88. We are still 18 handles in the red, so it's a tepid rally. It's just,
Let's
but I
talk
think
about the Ford deal for a second because you brought it up.
Okay, I brought
Let's
it up.
talk the Ford
Okay.
deal, then we'll get to Meta. Meta is coming, folks. We still got 25 minutes. We got all the earnings, but we might as well start with the Ford deal because it does have a tentative deal in place. It has to get ratified, but it looks like we've got a deal for Ford.
The United Auto Workers have reached a tentative agreement with Ford, potentially ending a 6-week strike. The agreement is described as historic and includes 25% general wage increase, raising the top wage for workers to over $40 an hour, an immediate 11% wage increase upon ratification. UAW President Shawn Fain indicated that the negotiations with GM and Stellantis are up next, as they've yet to reach a satisfactory contract. The strike, which began in mid-September, aimed to secure better compensation and benefits for UAW members. The workers at GM's Arlington assembly plant recently just joined the strike.
So great news. We knew a deal was coming. We knew we would get a deal pop. There was no doubt we're going to get a deal pop. We're getting it. I think people are probably very disappointed in this pop, seeing it up 20 cents. I think I'm not surprised. I think we're going to have major problems for the automotives in 2024. I think their margins are going to be squeezed because of not only increased wages, but and the other end because of decreasing demand. And I think we're going to see where these PEs look like 4 or 5 start to look actually higher, despite actually the stock prices going down, because I think you're going to see a lot of people not buying new cars in 2024. So this is one area I would absolutely stay away from. Don't get caught in the value traps. They've been value traps. I think Ford could eventually be single digits here. Sorry to be the bearer of bad news. I'm looking in areas, but not these areas, because I think the big ticket stuff is going to have a really rough 2024. And that's, by that, I mean new cars.
Well, and also, the financing end is working against it, right?
That's the whole reason, Joel. I mean, nobody pays cash for a car anymore. Nobody has cash. Nobody has
some
the
people.
money. Yeah, the rich, the ultra rich, and this is a good conversation.
the upper
ultra
class.
rich spend.
The
ultra rich spend no matter what. You don't have to worry about the ultra rich. They're going to be spending. It's that middle class that finances everything, and then they look at their car payment, and it's not 0% financing anymore. It's 8%, 9% financing. Yep. It's too much.
They can't afford it.
And then the car prices have increased substantially. You do that math, and like the Cox Automotive gentleman had said, you've priced half of the population out of the new car market. Yep. And you're going to continue to price more people out of the new car market if rates continue to go up. So I think you've got to just look here and say these are value traps. They've been value traps. If you've been bullish the automotives, you have been dead wrong. Is there a point where they turn here? Maybe. Today is going to get a big test for it. Can it hold on to the gains, or does the market say, oh crap, now we have margins getting squeezed, and we know that it's going to be not a great 2024 for demand. So I think the rally eventually does get sold. I don't know if it gets sold 20 cents up. I was hoping for a better rally than that to sell. So I'm epically disappointed it's not rallying further. I was hoping for like a 5, 6, 7% pop, and then I was going to short into it. But the pop's so weak, I'm not even sure it's going to get any legs here.
Yeah, and one thing that I want to point to, and I'm just going to bring in some talk that's with Southwest Airlines on this, because it's about wage inflation and what we keep seeing with labors. And so just recently released last night after 4 p.m., flight attendants will have the opportunity to vote on a new contract. So Union Local 556 for the airlines that nearly has 19,000 flight attendants that works with Southwest Airlines is working on another contract. This is what I think we'll start seeing from every single union in the country. They're going to be asking for more because more is asked and more is given, baby. So this is what they're going to be doing. They're going to be pushing and pushing for these raises. And that might sound better for maybe the workers themselves, but the truth is wage inflation starts to kick in. And if you want inflation going back to 2%, you're going to have to stomp this.
Dennis,
And
I don't.
inflation is going to be sticky. Wage inflation
Yeah.
is very
Yep.
sticky, and wage inflation will drive prices higher across the board. People want to be paid more because they perceive everything going up, and they don't even believe it. That if it comes down, there's still people are going to be saying, "I'm paying more for stuff." So it is a spiral. This is it.
Yeah,
This
I
is
agree.
what the spiral
comment,
is. Paul, you're correct. And that's what the Fed is dealing with. And that's why the Fed has kept their foot on the gas pedal. They know that eventually it's going to come down hard. I think the Fed secretly knows they're probably going to get a hard landing here. And you look at GDP at 4.9, you say, what the hell? There's no way you're getting a hard landing. This is soft landing written all over it. But the stock market is actually telling you something else. The stock market is saying, no, we don't believe it. And we think it's going to turn. It's going to turn hard.
Dennis, I don't know what you had your eye on right at the close, at the conclusion of after hours trade. Oh, no, it was before that because you did get a pop to 12.16 on a couple 100,000 shares. Yeah, you did.
Oh, yeah. No, it did. Right before the close on the deal news, it popped up.
Yeah.
The algos, man. They're like, oh,
Yeah,
deal,
yeah,
bye.
Yeah. So no, because it's weird the Wix didn't show up like that. I mean, you're right. I mean, this is like a muted bounce off. It is
very
needs to be
muted.
ratified. Yeah, very muted.
This was the reason that so many bulls in the automotive are saying, well, it's all the strike. We are down so much because of the strike. Well, the strike's ending. You got a 20-cent pop. That's telling us that there was a lot more reasons for this sell-off than just the strike.
I'll just keep an eye short term here on the trio of highs at 11.75, and we're above that, so we hold 11.75 bid. There's probably a bunch of paper at $12. People that were buying the dip, continuously buying the dip, looking to get out. But you're up 29 cents. You're up on 1.3 million shares. So I don't think you're going to get this if it came in unchanged on a day trade. Oh, I would like it unchanged on a day trade. Don't think you're going to see it. Let's see if we can clear $12. S&P's slow roll north here, down 15.5 handles. Thin offers out there, and that's what I was looking at. That little whoosh. I thought I was looking for a little bit lower of a whoosh. I'm sorry. I wish they would have hit it just a little bit more. But they don't hit bids, right, Dennis, when the market's going up, and they lift offers, and that's what you got there. 41.93 is your last print, and have we done Meta yet?
Any earnings?
We're going right to it. Meta
earnings.
Q3 EPS.
What are we doing?
Go.
What are we doing for 43
Let's get to the roller coaster. Meta Q3 EPS, $4.39 beats the $3.63 estimate.
Holy
they do see Q4 revenues at $36.5 billion to $40 billion versus a $36.64 billion estimate. Sees fiscal year total expense at $94 billion to $99 billion. Daily active users up 5%. Facebook monthly active users up 3%. Meta saying that we expect 23 capital expenditures to be in the range of $27 billion to $29 billion, updated from our prior estimate of $27 to $30 billion. Where things got really shaky is that Meta expects Reality Labs to be at an operating loss to increase meaningfully year over year due to ongoing product developments and efforts of AR and VR. It looks like they've lost a reportedly $3.7 billion on operating loss on its latest financial report, primarily due to the decrease in Quest 2 sales. Of course, the Quest 3 is out, so that could also be affecting it here. But I did want to bring in a little extra from my man, Nick Brown, reporting for Meta. They said the word AI on the call 87 times compared to 59 times last quarter. So they actually spoke about AI more this time than they did on the last quarter.
Pump those stocks, man. Pump those stocks. Talk AI. Fantastic numbers again. Much like the Royal Caribbean, nothing wrong with this quarter. Quarter was great. Everything is wrong with the market right now, which is why they're selling good stocks or good earnings reports, and they just don't care at this point in time, which is why I keep saying it's getting a little bit too easy for the bears here. And I'm like not full on like running around shorting stocks here right now. I think we've got a relief rally in store here, a relief pop, a dead cat bounce, call it what you want. Meta was crazy. So the bull battle was unbelievable here. Joel messaging me. He's like, did you see what Meta did before the report? So closes at 299. Look at this yo-yo. Tanks 10
Yo-yo.
bucks.
On
It tanks
nothing.
$10 before the report. Somebody just spooked. And I don't know if they saw something that they thought was the report, but it wasn't. Tanks $10 in the report. So it goes down to 290. Then comes out with the report and pops to 310. Then immediately goes back to 290. You all see it in this all same bar. It comes all the way back down to 290. Then pops all the way back up to 315. I'm not joking because I was watching the whole thing. And then they come out with guidance and it pops on and falls all the way back down to 287. So if you're keeping track, it was here. It goes down to 290, up to 310, down to 290, up to 315, and back down to 290.
Yeah.
That is a yo-yo market.
How do you trade something like that? Let's be honest.
Fade
That
it
would
all,
scare the
Mitch.
hell out of
Fade
me,
it
man.
all. If
I
you're
was looking at
chasing,
it. Yeah. I was
you're
looking
getting
at it.
crushed.
I'm
Yeah.
like, it's out. It's out. Where's the report? I'm like, where's it out? Where's it out? There's a leak. Wait a second. Then it tanks down to 290, and I'm like, it's not out. Someone, and then like Dennis, you get
And
like,
then an
well, son,
extreme beat.
yeah, I thought I could see Dennis saying, well, they gave me a 10-point lead on the long side. I mean, what but you had
Yeah,
to
no,
be
I would
cat
do that.
quick.
Normally, I
I
would do
know,
that.
but you had to be cat quick on it,
Yeah.
to be able to do it. I'll just make the numbers simple after all that talk there. What I find interesting about this chart is that whoever got the big sell order right after the bell, it went to 86.68, and then you just came down again to 86.28. So is that 3-star support? No, but if I was sure, I'd like to see if it opens up and like all of a sudden like you're 287, 288, then you might have seen the low in the pre-market session. But that's the only thing standing out to me on the dailies. There's really nothing in that area as well. So that was a wild one, man. That's good. And I just want to go back to we had Craig Johnson on last week. And Craig's given us a lot of good information over the
Yep.
years. Timing is of everything. And though things are not playing out exactly the way he said, if they are abandoning these big stocks and they are going to move into the it looks like they're abandoning the big
They're
stocks.
banning
and
everything right now.
Yeah, but if you do get some kind of break in rate, a pause in rates, and you get a rotation, and Dennis, you'll be the first one to identify it and share it with us and our listeners. The rotation now is sell and sell, but eventually the money managers rotate. So he did talk about the big caps coming off. And maybe that money going to that, making it a broader market rally.
I feel like it needs to happen. Like I feel like and again, we're going to go into more earnings reports here, but the macro is driving the bus on everything. It's like the earnings don't even matter. It's the macro is driving the bus. The rates are driving the bus, and they continue to drive it. That's why we continue to talk about it on this show. I mean, I think it's just been too easy for the bears at this point in time. It feels like you sell the rip, you make money. And I'm feeling it too. I'm feeling like I short stocks, and I'm like, I'm right every time I'm shorting stocks, like on a pop. And I'm like, it's too easy. It's never that easy. So whenever it gets that easy, it makes me cautious. So where I've been full on bearish, if you've been listening to the show for the last month, I've been full on the bear train. I think it's time to just be cautious here now if you're bearish. Not saying I'm going full in on stocks, but I think it's been too easy for the bears. And I think we're due for a little dead cat bounce, especially in some of these beaten down names that are relentlessly sold. When are the airlines going to pop? I mean, it's just a perfect, Jeff Mackey purple crayon downtrend that just doesn't even have a blip up. It's just some simple Simon. I mean, Royal Caribbean too, trying to pop here a little bit. What the hell was wrong with this report? They said everything right. I mean, if you believe anything in fundamentals, the stock should not have been red. I mean, and now it's starting to lift here a little bit. It's been too easy for the bears. So I think the time to be bearish has passed us. I don't think, I'm not saying, I'm going in here and buying stocks here because I think it's too early to get full bullish. But I think it's time to stop shorting stocks, at least I short stocks every day and I buy stocks every day, but leaning to the short side. I think it's time to stop leaning to the short side, at least in the short term. It could be rough in 2024. We may go a hell of a lot lower, but I think we got to just start to cool it with oh yeah, this is, I have short stocks. I think you're eventually due for a dead cat bounce here.
But we could get a dead cat bounce right now. We're 24 handles off that pre-market low, gunning for to get green. Maybe get green on the session today. That'd be a nice little turnaround. Still got 14 and a quarter handles to go, but the complexion of the market has changed. Like yesterday, you're throwing bids out there, you're getting hit. You're throwing bids out there, you're boom, buying, ooh, boom. Oh, wow, I got that. Oh, I got to get today. Now you got to be scratching your head and say, crap. I was too cheap on that number. I wanted to get near the low of the day. That's what I wanted them to hit it to. But you know what? They did get to the low of the day. It stopped 5-6 handles off it. So the cheapies out there that didn't buy yesterday are like, oh man, I should have just stuck with that bid. Or the more patient investors say yesterday was a really bad day. We're probably going to get some follow through. Now, especially for the bigger buyers, like let's say, and then this is just like an example. Let's say someone wants to own $250,000 of Apple under 172, but they didn't put the order on a desk, and they said, let's see what happens with Meta. I want to own it before earnings. That's not a huge amount. That's a decent amount of stock. But now a trader on a desk has that order and he's licking his chops, because he knows he's due a fill to this person at, 172. He's going to get him a much better price. So a lot of different ways you can look at the market. Dennis, good call on Royal Caribbean now that is on the move. Toronto Dave with a great question. If you have a 12 to 14 month horizon, what are you looking at? And then Toronto Dave is in his late 40s, kind of like Dennis. I think people like you and Dennis and Mitch, I mean, we could talk all these bearish things and stuff.
That time horizon isn't long enough. So the 12 to 14
I would still be bearish.
Should be lower in 12 to 14
I would still
months.
be bearish in that
5
time
to
frame.
10 years. If you have 5 to 10 years, I'd be buying some stocks.
Yeah. That could work.
5 to 10 years, I'd be buying some stocks.
And then you'd have to use kind of like an average down strategy, maybe even time that strategy quarter by quarter as you go lower and lower. Now, one thing that I wanted to get to, of course, is IBM's report. So let's get to that Q3 adjusted EPS, $2.20, $2.13 estimate. IBM Q3 revenue, $14.75 billion, beat the $14.72 billion estimate. This has been hanging on a trend line on that monthly report for a good while. Look at that monthly chart. Can IBM start getting going today? I know I'll be watching on what you're talking about, Dennis. One stock for me that I'll be watching, of course, is Microsoft, but IBM already looking good here.
Yeah, it's holding on to its gains, which is good. It's value tech. I mean, they have a pretty decent dividend too of 4.76% and a 5.5% environment. It's not great, but I mean, it's a sleepy AI play. I've been talking about this play for a while and it's come down here. Maybe money, Mitch. Maybe we got to start buying the sleepy AI plays here. Like maybe I'm torn.
I'm scared about NVIDIA's report. I'm scared of NVIDIA's report.
Dennis, watch your offers here. You might be getting picked off here.
Yeah, we're trying to rally. We're oversold.
Oh, look at Microsoft. It looks strong right now.
Well, Microsoft got upgraded today too.
Ooh, that'll help.
And full disclosure, I do have a small long position in Microsoft, but it's a trade. I'm selling it. No, but I'm selling it today. It's a hedged position, which is not a flat out long.
The IBM here, it was a decent report, but I just look at this chart going back to 2016, and I don't know what the hell to do. I mean, it definitely has not been. It didn't participate great in the rallies. It underperformed on the declines. I mean, if you 150, if the thing ever clear, I guess maybe on this rally there's room up to 150. But I think what you need to do is just establish a 150 bid here. IBM just a tough stock up 244 on a decent report.
TLT rallying here too, folks. We haven't mentioned it yet before we go to the next one, but that is helping. We were down. We rallied about $1 here, bouncing off of the Ackman bottom, 82.42. Where did we get to today, Joe? We just maybe potentially put a double bottom in here. We were just under 83. I saw. Didn't quite get down there. We're calling it the Ackman bottom because that's what it is.
That's what it is.
Hate it when I said that, but he turned the market. It was the Ackman bottom in the bond market, and it's still intact. So it did not get breached. It is still intact. So the Ackman bottom is still intact. We will call this the Ackman bottom until the Ackman bottom is no longer a bottom and TLT makes a new low.
Yep.
You know what? I haven't done this in a while. I haven't wrote on the charts in a while. I've been lazy. And I'm going to make this, I'm going to edit the text. I'm going to do it live here. I'm going to make it bold. And I just wait. Hold on. Hold on.
Technical troubles here.
You guys don't think I know how to do this stuff. Yeah. I'll just look at it. There we go.
Oh, Joel.
I will be there. Joel
There you
will
go.
erase that when we make a new low.
Yes. Maybe we'll get Bill on the show. I will tell you.
Yeah, get Billy Boy on the show.
I tried, Dennis. I something happened.
You said no to us.
Dennis, I think you said something once, which wouldn't be out of the ordinary.
Come on.
Yeah,
they found something I said negative about Billy Boy.
Yeah.
Oh, Dennis.
And they said no. They're like, they looked through the history of pre-market prep and said no.
Oh, that's
Dennis said some negative stuff about Billy Boy back in the day. And Ackman, let's be honest, you had a rough 3 or 4 years back there, about 7 or 8 years ago. You were making a lot of bad calls. So you've turned it around. You've totally redeemed yourself. Please come back on. Look, I'm begging you, Bill.
We never got him on.
You've totally redeemed yourself. You're out of the Kathy category. Kathy will never come on my show, although she does come on some Benzinga shows. But Billy Boy, we want you on the show.
You know what? I do get his administrative assistant to say no. So I mean, I don't.
At least you try.
Yeah. You got to figure out what the email is, and then it's pretty easy to do. But maybe if he's hearing us right now, maybe he'll want to. He comes on CNBC occasionally, but yeah, he's really come back. But 8:57, we've done 2 earnings reports so far. Mitch noticed a good. Yeah, what is that? It? Do we want to?
You get like 1 or 2 more in, so grab your favorite.
We'll cover some of these on live trading next. We'll wrap up the show we'll wrap up the show here, guys. And the truth is we can't get through all the earnings reports, right?
Amazon Intel tonight, folks. Amazon Intel tonight.
Yeah, that's the major thing I would focus on. Instead of worrying about reports today, maybe focus on those 2 stocks today. See if they can get the lift before going into the earnings. What do you think about those charts at least set up here?
Oh man.
Amazon's been getting wrecked lately. So
yeah, my wife is
that actually sets in here.
Account. One of the only Magnificent 7 that I own indirectly through my wife's RSP. It's coming in now. I've wanted to sell it, but I was like, I got to hold something. I got to hold one of the Magnificent 7, so I've been holding on to Amazon. But it's coming a little bit, but scared.
Still having a good year. I mean, it's still having a good year. I mean, it started the year at $84, and even at 120. I mean, it's having a. I mean, we lose perspective on things because we get so caught up on the the short term, but it's still having a hell of a year. But 80. Wow, that is 60-point rally. So I mean, if you're looking to add this long term, 110, 112, I don't know if it's going to get there off the the momentum of this market, but I think there'll be on a bad report or whatever, a good report that doesn't meet expectations and guidance or whatever, or if they say something negative on the call. The 112, 113 area looks interesting for Amazon.
All right, let's wrap up the market here. What's the last outlook on the ES, Joel? What would you be watching?
We're going green today. I don't know when. I don't know
turnaround Thursday. Not turnaround Tuesday. It's turnaround Thursday. I think we're going green today too. I think the bears have had it too easy. As a day trading hat on, I'm buying stocks right now. Not long-term investing because I'm still sitting with a lot of cash. I'm very happy that I am because my stocks have been destroyed that I own, and I'm glad I didn't own 100% of them. But day trading hat on, buying some stocks today.
Okay.
All right. That's going to do it for us here on Pre-Market Prep. Like
you
always,
forgot something, Mitch. You forgot something.
Guest tomorrow. You see, you caught me. I caught you yesterday. You caught me today, baby. What will we have on tomorrow, Joe? Who's our guest?
Someone that you've never been on with before. And it's not going to. No, he's been on with Dennis and I, and it's not going to be like a supermarket like stock picking extravaganza thing. But it's going to be a very interesting discussion with a very interesting guy, Dennis. Ian Weiner is coming on the show tomorrow.
Oh, nice.
Yeah. And he is he has really interesting job, what he's doing now, and really applicable to what's going on in these markets. And he's just a super smart, super nice guy. And I just want you to know that going back to Brianna got him on, but because of him, I've had Michael Pachter, Joel Kalina, who used to come on,
Yeah.
and just developed our entire Wedbush pipeline there. So really looking forward to talking to Ian tomorrow. We're going out here, S&P's off the lows of the session. So
Trader
that's
just
where we're at.
messaging me breaking news on Tesla. I don't have that. Somebody just
What-
messaged me, so I don't know. I didn't look here yet. I'm just getting it from another trader.
Tesla.
Tesla.
Dun, dun,
Sorry,
dun.
I didn't look here yet. So if
Yeah,
anybody
I
else
haven't
has
seen
that
anything.
too.
I haven't
Okay,
seen
maybe
anything.
it's
Hit the
wrong.
tape.
Trader just messaged me, said breaking news on Tesla.
It
but
is
maybe
moving.
I'm wrong.
It is moving.
Yeah, that's why I noticed it's moving.
That's how we
We'll
notice,
find
right?
out.
We
We'll
look at
find-
the action, right?
We'll find out in a couple minutes. Okay, everyone, have a great day. Back with you. Triple D joining me on the closing print today. Let's see if how things turn out to what we talked about this morning. As always, have a good day.
All right, guys. I'll hop you guys out of here. Have a good one, Dennis. Go do what you do best, my friend. Go get to the
Good.
trading action. All right, guys, I'm going to wrap it up here and bring you guys over, of course, to the next show. We got live trading coming up next. And like I mentioned, if you guys want to cover the rest of the earnings reports, I'll cover those on live trading. Or you guys can stick, of course, with Premarket Prep Plus now to get you guys over to that live trading show. And let's see what we can come up with today. I'll let you guys know at least I have a swing on AU, and that's what I'll be looking at. Some gold today, maybe, as it's already getting the lift in the pre-market. We'll see if it continues rising. And of course, I'll be looking for tech trades out there. Will we bounce today? Microsoft on my radar. Come find out what I trade today. Of course, trade the pull action. Check it out, guys. Coming up next. Don't go anywhere.